North Dakota State Extension economist Frayne Olson is our marketing analyst this week. The USDA's October crop report shows an increase in the agency's expectations for this year's corn and soybean harvest. It's projecting records for production and yield in both crops. If current numbers are realized, Nebraska would be the third largest corn producing state and finish fifth highest in soybeans. As a whole, the country is well behind in harvest progress according to the latest USDA progress report. U.S. farmers are 19 points back of the 5-year harvest average in corn and 13 points off the norm in soybeans. We talked with Frayne Thursday morning about harvest progress, the U.S. stock market, and his thoughts on the October crop report.
It was relatively neutral, to be very honest with you. The USDA numbers came in very similar to what the private estimates were. A lot of the private analysts put out their best estimates of what they think the numbers are going to be, usually about a week ahead of time. So the USDA numbers came in very, very close to what the private numbers were. And actually, given all the possible changes that could have occurred, it was a relatively neutral report.
Your reaction to the slow rate of harvest we've seen so far?
Yeah, we are behind on both corn and soybean harvest. Again, not dramatically behind. The rain showers have been coming through the central part of the U.S. have slowed that down. It's something the market is watching. Nobody's really concerned at this point about the delays. Again, there's the expectation for this massive crop coming in, and the Eastern Corn Belt is sure verifying those numbers.
So we've seen a small rally in corn and soybeans, but I think the question for many farmers as they're out in the field is, can it continue, or have we found a bottom?
Well, I mean, the good news is at least it's not going down anymore. The open-ended question now is, have we seen the harvest lows? There's obviously a lot of debate about that. I guess in my personal view, I think we are either at the lows or have seen the lows already. Although I don't expect any major bounce. We're still, again, relatively early into harvest. My expectation is that we're going to see prices bounce around kind of at these levels until we get through the end of harvest. So my guess is for the next couple of weeks, we're going to be in a pretty tight trading range. Unless, of course, there's something unexpected on the national and international front.
Where does that rally come from, Frayne? I mean, it seems like the market is expecting that there are going to be huge crops of both corn and soybeans. What kind of thing does it take to really give fuel to either one of these markets?
Well, the market is the grain market in particular is got a history of the pendulum swinging a little bit too far on the upside and sometimes a little too far on the downside. And I think coming into harvest, there was a lot of negative news. There's a lot of expectations about super large yields. There's a few of the private analysts that were coming out some extremely large yield forecasts. And again, some of those numbers were confirmed with the early yields that were coming in. But as we get into the central and northern corn belt for both corn and soybean yields, I think we're starting to see they're good, but they're starting to moderate a little bit. And so some of those really large numbers that the market was looking at really aren't going to be able to be achieved. So I think there was a little bit of an overreaction early on, and now that we get into the heart of harvest and we're getting some better yield reports, we're realizing it's a large crop without a doubt, but not as large as we had anticipated earlier.
The U.S. stock market has not been doing so well as of late, Frayne. Is there any spillover, or I guess how much spillover is there between the overall U.S. stock market and ag commodities?
Well, and that's a great question, because as we've seen the commodity markets, in particular grains, start to retrace now and prices come down, the interest in a lot of the fund investors, those folks that are constantly shifting between the stock market and outside investments and the grain markets, have gone away from the grains to some degree and into some of the more active markets like the stock market. We're starting to see now, as the stock market begins to fall, they're taking some of their money back out of that and putting them back into commodities. Oil prices have been retracing, so it looks like the grain market might be a better place to be putting some of those monies. And we're starting to see some of that reinvestment of the funds come into the market.
Going into harvest, there were many concerns about rail availability. You're in the heart of it there in North Dakota. Have there been problems?
Well, so far, again, just to retrace and to give people a perspective, we had some pretty severe problems last winter. We had a lot of concerns. The backlog of cars and deliveries were cleaned up significantly as we moved into midsummer. Now as we get into harvest, we're starting to see those backlog in cars begin to grow again, but that was really anticipated, to be very honest with you. Given the size of the crop, it's going to be extremely difficult to get all this grain moved.
Is there a backlog now?
There is, and the backlog is starting to grow. And again, in North Dakota, we tend to be the center of the bullseye on that, and so our backlog of cars is starting to grow again based on the current reports.